Now let's turn our attention to the second worst. This one hits close to home. It's the financials. Dom Chu joining me now for Market Navigator. It's been an ugly week.
It's been bad. And it's worse than technology, by the way, at this point right now. So it's been a rocky week for Wall Street overall. But our next guest says that despite all that volatility that Leslie just mentioned, he thinks that financials are still a safe place to put your money. I'm going to drill into that a little bit here. They're still green for the year. They're outperforming tech stocks. So joining us now is Gaurav Malik, the Chief Investment Officer over at Palace Capital Advisors. Gaurav, you're still basically saying that if it ain't broke, don't fix it. I don't understand how you feel that good about financials, seeing the price action that we've seen this week. So take us through what you think is the good bull case for financials outperforming in 2025.
The bull case of financials is completely based on a bull case for the economy. And my take on it right now is that a Republican administration is not going to leave the U.S. economy in a worse shape than they saw it in. So our forecast is that GDP growth will continue to be near the 2 handle. Inflation will start coming down, and you can expect inflation to fall in line with the Fed's mandate by, call it 2026, towards the middle to the end of that period. Remember, we were sitting here just a month ago, and everybody was in the steepening trade. And now we're talking about the opposite thing occurring. The 10-year has flattened out, so NIMs are in pressure. But the core case for banks relies on the fact the consumer is still in reasonable shape. We do think corporations are going to do well. Corporations are going to be able to bounce back. And you have a good situation in financials there. And valuations are not aggressive. It's still a sector that we can expect to have anything between, call it, double-digit earnings growth as we look at 2025 and 2026.
There's no doubt that those financials are a value-oriented sector, certainly not talking about the valuations of technology. But are there places within financials? I mean, they encompass everything from insurance companies to investment banks to regional banks to everything else. What exactly, in your mind, is going to be the outperforming part of the financial sector? Is it the big money center banks, or is it going to be some of those investment banks?
I think both are in play for different reasons. So we think that deregulation is one of the promises that Trump is likely to keep. Deregulation is going to unlock capital. When that capital gets unlocked, it can be used by the investment banks to get into segments they've not been able to get into so far aggressively. We're seeing that this year with private credit. It's going to mean regionals will have some more money to put aside and return back to shareholders. So there is room for either dividend expansion or there's room for buybacks occurring in those sectors. So that capital coming back is what we are really excited about. I think on balance, we do like the larger banks a bit more because the current volatile environment means trading revenues are likely to be stronger. And we do think that M&A is going to be a dominant place to be as you look at the rest of the year.
All right. Gaurav Malik, thank you very much at Palace Capital with the play in financials. Thank you very much for that.
There's also kind of a flow story here with financials, Dom, because we've now had time to sift through the 13F filings, which show what investors did in the fourth quarter. And financials were a big overweight for mutual funds, even more so relative to some of their hedge fund peers, specifically some of the money center banks. And so we know where they stood as of the end of the year. It's likely that because of, just what we've seen with regard to momentum to the downside in the sector, that has really shifted over the first 2 months of the year, really.
But we saw, that momentum story was hugely positive for those financials, especially in the latter half of 2024. The issue now is whether or not that momentum trade is going to get caught up with those banks going to the downside because they had such a nice run over the course of last year.